Hello traders and welcome. My name is Shah Chowdhury and welcome to this week's edition of the Forex Market Preview. I know I'm a bit late this week, reason being I like the market to open up, settle down before I conduct my analysis for this week and give you a better understanding of where the market is likely to go next. Before we move on to the four pairs this week, I'd like to recap from last week on the New Zealand dollar trade that I took. Let's get into this and I'll show you what happened. Last week I mentioned that I was looking inside this zone around about 67.43s. Price did come back down into this zone and we managed to get involved on a lower time frame, on the 4-hour time frame. Now if we look here, this is where I think if you look back on last week's video, you'll notice that price was around this level right here. Now I'll leave the link below for you guys to have a look if you haven't already watched that video. But where I got involved was this candle right here. We already knew that we had a bullish divergence here on the RSI. Now my RSI is set to 80-20, where we want to filter out extreme oversold and overbought conditions. Now we were oversold here on my RSI. We've had bullish divergence and we got this bullish momentum candle here, right here, around about 9 o'clock. And this is where I entered my trade. My stops went below my zone here, safely tucked underneath, and we took a 1-to-1 trade. Now what happened was the trade actually went up, teased me for a bit, came back down again and put me into a negative, and then went up and hit my targets. So I was quite happy with that. But let's move on to what's on my radar this week. One of the pairs that I'm looking at this week is the euro dollar, and I'm on the daily time frame. I'm actually short this pair, and I'm going to explain to you why I've shorted this pair and why at this specific level at 13.05s. I believe it's 13.05s. Yes, around 13.05s. Why I shorted this pair, I'm going to quickly explain to you. We know that this market has been making lower lows and lower closes, so we have been bearish here, even though a lot of people will say we're consolidating, which we are. But we've made a series of lower lows, lower closes. Now since then the market rallied to previous outside return, fell to close above, though it broke above but fell to close above this level, and the market literally, we had a sell-off coming back to retest the support zone at 12.05s. Since then the market has been pushing back. Okay, it's been rallying back up. Now I've shorted this pair at this level. If we drop down to the lower time frame, but before we do, I want you to look at the structure shelf here. This day here we had a massive bearish days, two massive bearish days, and then the market stalled at this level. Okay, market found support at this level before continuing the bearish movement back to support. Now if we look back, so we've had some support here at this level. Okay, we've had support again here, looking left, we've got support, we've got support, we've got support. It's a level that is acting as support and resistance. Okay, now we've come back and we're finding resistance. You can clearly see this yesterday, well, this would be Friday's candle. Yep, Friday's candle, and we had a big massive rejection here. We had it was a bullish day. Market tried to push a bit higher and then failed and came back and closed back at this level. Now if I drop down to the 240, I'll be able to clearly show you where I got involved on this. Now here we go, it's this candle right here. Now if I draw a zone straight through, right here, I was looking at this level right here. Okay, if we draw a zone right here, the market pushed back up to this zone, and then we had a bearish candle right here. We had bearish evidence right here. At the moment, the market has created a double top, and if you look at my RSI, you'll clearly see we've got bearish divergence. We've had an equal test of the highs at this level. Now, I took an aggressive short here with this bearish evidence that is part of my trade plan anyway, and I've back tested this strategy on several pairs that I'm trading, and I've taken a short at this level. Now, I'll keep you updated how this turns out throughout the week, but I've put my stops above the highs, ATR above the high, and I've taken a 1-to-1 trade to my first TP. The second take profit, I'm going to trail straight down to 1205s, back to support. I'll keep you updated how I get on with this trade throughout the week. Let's move on to the next pair. Okay traders, I'm on the pound dollar 4-hour time frame here, and I'm an advanced pattern trader, and there's a deep gartly setting up on this pair on the 4-hour, and I'm going to exactly show you where that is. There's actually two gartly setting up on here, and one's a smaller one, but let's start off with the big one. If we take our X leg right here, if we draw our fib levels in from X to A down right here, you clearly see that the 61.8 gets hit. We've got a touch at the 61.8. It is a deep gartly going close to 78.6. If we let's take that off for a second and draw in our fib extension from A to B and back to A again, and you'll see the decompletion at the 127.2, and I'll draw the bat in exactly where it should be, is at 32.57. So you'll be able to see it clearer when you got your X to A to B, B to C, and C decompletion at the 32.57s. Now you have got a smaller gartly setting up as well on this pair. If you take the B leg right here, let's draw our fib levels back in on the B leg. So if we take our B leg and turn it into an X leg, so you can clearly see the 61.8 is getting hit right here at this level, 31.17s. We've got a touch at the 61.8. Let's take that off, draw in our fib extension from A to B, back to A again. So we've got A to B and back to A, and we've got a decompletion at 31.63s. So if I draw this in as well, and I'll change the color on this one, you'll be able to see that as well. This is what's on my radar going into this week. There you go, at the 31.63s. So we've got another gartly setting up at the 31.63s. You can take advantage of this. You can actually enter at D, taking a short position, and then if the market rallies back up, you've still got another entry level at 32.57s to profit from this pair. Let's change the color on this anyway. Let's see, let's change the color to a brighter color. You'll be able to see it clearer. More in my language. So let's go to background and let's turn it into green. There you go. Okay, so you've got two advanced patterns setting up on this pair on the 4-hour time frame. Keep an eye. I'll tell you how this gets on. I'll give you an update as well with the euro dollar trade that I'm in already. Let's move on to the next pair that I'm looking at. Okay traders, I'm on the dollar yen. This is my final pair that I'll be doing my analysis on for this week, and I'm on the 4-hour time frame. Now what's happened here is we've had a bullish rally into previous resistance looking left. If we draw back out to the daily time frame, you clearly see a nice little structure shelf. It is an even handle number. We've got the 112s even handle, and market has been respecting this, looking left. We've got support, previous resistance, looking left, and that's about it. And further back, I'm sure there's more support and resistance at that level also. But what I'm looking at, if we drop down to the 240 again, 4-hour time frame, market has stalled at that level, and now we've created a double top. Okay, RSI at the first test was extremely oversold. We've got bearish divergence on my RSI. Now I've got my RSI again set to 80-20s. I want that extreme oversold, overbought condition. We've got equal test of the highs. There's two ways you can get involved here. You can wait for a lower close candle and take a 1-to-1 risk reward for your first TP, and the second one here down at 110.90s. If you want to be more conservative, you can trade the 26.18. You can wait for a break of structure at this level, draw your fibs on to the 618, wait for the 618 to get hit, take a 1-to-1 risk reward as well. Okay, now I'll be waiting for that lower close candle here. I want some bearish evidence in this zone before I short this pair, but I'll keep you updated of what happens if this doesn't play out again. If this breaks towards the upside, the next level of structure looking up, let's go back out to the daily and I'll show you where price is likely to go next if we do get a break above, close above on this pair. So the next level that I'll be looking at is up here at this level. Previous support should turn into resistance at the 112.63s. This is the level that I'll be looking at next. If price does create a higher close, breaking structure to the upside, I'll be waiting for a pullback on the 4-hour, so something like this. So if we get a break above, close above, I'll wait for a pullback to ride this up. Okay, depending on what the market does. Let's wait for the market to tell us what it wants to do next, but I'll keep you updated anyway, guys. That's it for me this week. Have a lovely week. I'll keep you updated once again on the pairs that I'm already involved in. Wish you well and have a prosperous week in the markets this week, and I should see you next week with our Forex market preview and what's on my radar for next week. Now I'm going to tend to put these videos out on Mondays. I like to wait for the market to settle after the close on Friday, but it opens up again on Sunday. But let's wait for the bankers to go in on Monday, wake up the market, and let's see what directions each one wants to take, and I'll do my analysis and I'll come back to you and I'll show you exactly what I'm looking at. Well, thank you for watching. If you did like this video, please hit that like button and share it around. Show me your support. But apart from that, have a lovely week.